What's going on, traders? How are you? How are you doing? This is Shocks, and today we're going to talk about an order block strategy that you need to be using, a simple strategy that you need if you are struggling and if you are seeing more of red than blue. So if that is something that interests you, like this video and watch through the end so that you understand all the rules that come with this strategy. So number one, what we are going to be doing is we are going to be using the H1 time frame, and we are going to be going from the H4. So we are going to analyze on the H4 first to understand the overall direction. Then we are going to be choosing our order blocks on the H1. After choosing our order blocks on the H1, we are going to enter on that same particular time frame. We are not going to any lower time frame. Remember, this is supposed to be easy to follow, and it's supposed to have very few rules to follow. So you can use this strategy on any commodity that you might think of, any commodity that can be traded, right? And if you're looking for a broker that have a lot of commodities to trade, look no further than TIOmarkets. Get your account with the link in the description down below. Deposit and start trading with the best. Let's go right into it. So this is GBP AUD on the H4 time frame. We are looking at this chart. What do we see? Number one, we are looking at the buyer's overall direction of this chart, and from what I can see here, this pin here that you see here is prominent, and we are going to mark that off as a peak here, and we are going to mark this off as a what? As a change of character or a change of trend. This was an uptrend, as you can see. Then when we got here to this pin here, we changed direction, or we shifted from what? From this uptrend that you see on your left, and we came here, and at this particular point, what do we see? We have a low that was taken out by this move, and it left out what? Order blocks, as you can see in this area, or this can be supply depending on how you want to call them, right? So this is what you are having here on the H4. And remember, this order block that we have marked on the H4 is not the one that we are going to use. This is for reference purposes when you go to the what? To the H1, and this is the H1 time frame. And from the H1, what do you see? You see that price is making a what? A downtrend move that you can see here. So this yellow zone is the what? The order block from the H4, and we are keeping it as reference. So what we need to do now is to look for an order block inside this yellow box on the H1, and we're going to be using that one to what? To trade. And remember, this is a live chart, and this is what is currently in the market, the 7th of August, a valid setup that you can look into if you see this video earlier. But if you see it later, you can use this same explanation or analysis to find something that suits the time that you are watching this video. So this will be something that you will be expecting to go back to this particular white zone, which is the H1 OB, and you go down. So remember, I will be showing you how you actually enter this type of trade and how you actually profit from it. So this is a simple strategy that I want to show to you. And let's go to another commodity. So this is a very volatile commodity, USD ZAR, which is the US dollar versus the South African rand. And from what you can see here, you can see that we were in an uptrend. As you can see, this was an uptrend, right? So after this uptrend, we started to see price falling, right? So this was a change of character, as you can see, and price retested this order block on the H1, as you can see. So if you don't understand what an order block is, just search through this channel and you can be helped immensely, and then you can come back to this video and you can grasp this concept that we are talking about, that you can use to trade on the H1 without going on any other time frame. You can do this independently on the what? On the H1. So remember, we are looking at price, and remember, we cannot use order blocks if we don't understand the structure or the direction or order flow. So what is happening here is we have taken out this low again, right? We have taken out this low again, and we see that price is taken out this low, as you can see by this move, right? So this is the move. This is the move that has taken out the what? Price, right? After this move, right, what are we expecting? As traders, we are expecting price to go back to what? To this order block that we have marked with yellow and go down maybe to these areas, right? Why these areas? Remember, these are equal lows and there are pins there. So there is liquidity in this area, which means that price is going to that and filling this or inefficiency gap that you can see here. So this gap has to be filled by price on this one, on this other end, and we are targeting these lows. Why? Because there's liquidity resting on these lows and we want to take advantage of that. And if you don't understand what liquidity is, you have to watch a video that I will link at the end of this video about liquidity and explains everything that you need to know pertaining liquidity. So let's go to gold. A lot of you guys, I've come to notice that you want to trade gold and you like gold because of its volatility. So how do you trade gold effectively? Let's look at this uptrend and how we could have caught all these aggressive moves that you can see, all these impulses. We can get them using this simple strategy of identifying and trading order blocks. I want you to see that from the left of your screen, as we go down, price was trading down, or was trending downwards, right? But price took out this high at this particular point, right? Took out that high, and what did it do? It left an order block at this particular zone. And what did price do? Retested this order block and went out to what? To take out this high again. After taking out this high, it left another order block. And where is the order block? The order block is here. And price continues to do that, leaving what? Leaving order blocks. So what you need to do is identify order blocks and wait for price to retest those particular order blocks that price would have left. So you see, these are order blocks that price is leaving behind. And remember, if price does not retest your particular order block, it does not matter. You wait for the next order block. So I want you to see that this was in a period of, let's say, 6 days, right? This was a week, and we retested how many order blocks? 1 and 2. So it doesn't matter if price does not retest your order blocks. What you need to do is to understand that when your order blocks are retested, you have to have the best order block in the trend or in the cycle, right? We have another order block here where price just came and retested that order block and expanded lower, and we had this order block again and price did not come back to retest that particular order block. We have this one again. Remember, when you are marking order blocks, we are marking the pins and the body. We are marking the candle as a whole, right? So after marking your candlesticks, what do you do then? Understand that we are using the H1 time frame, right? And you are just using order blocks and market structure. So how do you enter the market? You might be asking yourself. So how we enter the market? Remember, this is an ongoing chart, and remember we said H4 first. This is GBP JPY, and from GBP JPY you can see that we have this H4 order block, and if you go to the H1 you can see that we had this order block right here that we can maybe use this one. So how do you enter this order block? You set your limits. That's number one. You set your limit at the base of this order block, and you set your stop loss above the order block, as you can see in this picture. So this is one way of entering, and the other way of taking advantage of these order blocks is actually waiting. This is more tiresome and more demanding, unlike just setting your limits and setting and forget. So you have to set and forget, right? So if you don't want that, you have to wait for price to actually come to the yellow zone and you actually press buy or sell at this particular zone and set your stop loss and set your take profit. But that is something that you would need to be on your chart at the right time, at the right moment, because you are going to miss a lot of trades using that particular strategy, right? We have this one. This is actually ongoing. This is Euro USD on the H1, and what you are seeing here is price had taken out this high, as you can see, and price retested back to that order block and retested here, went up, and now it's back retesting again, and we are expecting price to go up maybe to these levels. As you can see, we are expecting price at this level because we see a lot of liquidity at that particular point. So how do you enter this? Remember, if you had set your limits here, you are already in the trade and your stop loss is right below the order block and your TP is right there. But if you are not yet in the trade, you are to enter at this particular zone. Expect price to go up. So let's look at the last example here. The last example is going to be on the USD MXN, right, which is the dollar versus the Mexican peso. So from what you are seeing here, we were in an uptrend going up, right? So in this particular moment, I just want to show you something that you can use to trade. Remember, we have liquidity. So this is another way of looking at it, right? we have liquidity, and you know that this is the target. So price is currently here. So what do? You consider these are called minor structures. So you consider this minor structure, right? And you can see that price has taken out the high of this minor structure. And if you consider this order block right here, you could be able to enter this trade at this particular point and target the liquidity at the top there, while it's considering this as your what, as your intermediate take profit at this particular zone. So you can use this as a what, as a way of looking at price, or a way of choosing your order blocks, where you are using liquidity as a magnet to price, and then you look for a setup to get price to where you want it to be. So this is what I wanted to show you guys. This is a simple strategy that you can use on H1, that you can use on any commodity on TIOmarkets Limited. So guys, I'll see you in the next video. Cheers.